Welcome back. You're tuned into Open Exchange. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, we're bracing ourselves for trade and we get the pre-open rates in just a bit. But for the timing, let's get you some FNO strategies. Rajesh Palviya of Axis Securities joins us. Hi, Rajesh. Good morning. What do you have for us today?
Good morning, Nigel. So in the previous trading session, we have seen Nifty manage to give breakout above 17,850. So almost after struggling with this level of 10 days, now Nifty managed to close above those levels. So this is a positive development in terms of price action. Even on the derivative front also, if you look at most of the call writers have covered their position for strike like 17,800, 17,900, even 18,000 strike have witnessed call unwinding action. So it clearly shows that, now resistance is and supply zone is now getting thinner at this moment, and possibly Nifty may give a breakout of this range, and we can see a follow-up buying action in today's session also. So to initiate this trade, we are recommending here to buy 17,900 call option, which was closed at around 87 rupees. If we get any kind of gap down around 17,900 or even 17,880, it's a buying opportunity in the market. So this call option one can buy around 60-65 zone with stop loss of 30, and we are projecting target of 120 to 140 for this call option, and we are projecting Nifty target of 18,000 to 18,050 in the continuation of this up move which we have seen from previous trading session. Even on the bank Nifty, 41,750 is the key level for today's session. If we crosses those level, then yes, possibly we can see a good uptick in bank Nifty also, because a lot of call writers have covered their position in previous trading session, and both the indices are now penetrating its 100-day simple moving average. So we hope that this up move can continue for today's session also. On the stocks front, we feel that HDFC can show further more upside from the current level. Long build-up was there in the previous trading session. So HDFC Limited one can buy with upside target of 2770, 2790. Keep stop loss of 2670. Another stock is Reliance Industry. We have seen a short covering action in the previous session, and almost a consolidation of 5 days at the lower band has given a breakout. Looking at the price action, we believe that Reliance can continue further higher. 2440 could be the possible target in the near term. One can buy Reliance Industry with stop loss of 2355. Third stock is ITC. Strong buying action across all time frame. Stock is in bullish territory. Looking at the price action in the previous session, we believe that ITC can continue further higher. We are expecting target of 405 to 410 on the upside. One can keep a stop loss of 368 to buy ITC also.
Okay, all right. Thanks a lot, Rajesh. Have a good day. Well, in pre-opening, a couple of stocks deserve mention. By the way, the market is very quiet, but individual stocks are looking good. Torrent Power is up 2.5%. It was a really strong performance from Torrent Power this time. The net profits went up almost 90% and the revenue growth was 70%. So that one's looking good. And the two other good set of numbers came in from PI Industries and Siemens. Both those stocks should come up for you. GMR Airports Infra is also, reacting to its numbers, by the way. PI Industries up 1.2 and Siemens up about 2%. Nishal Maheshwari is still with us. Nishal, any thoughts on this whole capital goods space? The numbers have been pretty decent, whether it's ABB, Siemens, L&T. Would you raise your allocation here?
Definitely, Sonia. I think there is still a lot of way to go for this, basically, because we are seeing strong capex action now from the private sector also. So if you look at it, any of the order books for Siemens, Thermax, I think these are the guys basically who lead the private capex. So their order books are at new highs. And obviously the government has shown its intent very, very strongly, basically, as far as capex is concerned on the infrastructure side. So yes, definitely our top picks out there remains to be Thermax and a smaller stock, Triveni Turbine. So these are the two stocks basically which we like there.
Okay, all right. Which ones did you say? Triveni Turbine and?
Thermax.
Thermax. Okay, got that. Thanks a lot, Nischal, for joining in. Have a great day. Let's get a quick call in from the management of Landmark Cars as well. It was a decent quarter for them. Landmark Cars, remember, is India's leading premium automotive dealership, and they reported a 12% rise in revenues for the year so far. That's in 9 months. The company also managed to expand their margins to about 8.3% in the quarter gone by. Sanjay Thakkar, the chairman and founder at Landmark Cars, joins us now to discuss more on their Q3 performance. Sanjay, thanks a lot for joining in. So for 9 months of this year, your reported revenues have gone up about 12.5%. You're sitting on 2,500 crores plus. Tell us, what can you do by the end of the year? How is the demand situation on the ground now? And what are you targeting in terms of growth for FY24?
Yeah, so I think let me put one thing straight. We are looking at the pro forma revenue rather than the reported revenue. And this is a very unique year for us. And this needs to be clarified for everybody to understand. Our growth is actually around 41% year on year for the 9 months, and not 12% as is reported. And the reason for that is that Mercedes-Benz, which is our largest partner, that moved away from the conventional dealership business model to the agency model. So the revenue the cars that we sold hasn't been booked as revenue in our books in this year. Now, and that was not the case last year. So for an apple-to-apple comparison, we are talking about, and this is something that we have uploaded on the exchange sites also. So it's the pro forma revenue that needs to be looked at, because we get a commission on the percentage, as a percentage commission on the cars that we sell. So the margin expansion is not as high. And,
got it. So from the pro forma revenues, you're saying that 3380 crores is what you've recorded this time, which is a 41% growth. And you're saying now these are the value of cars that you've sold under the Mercedes-Benz agency model as well. So now the commission comes through. So can you tell us then, is this the reporting that you will do henceforth? And if yes, what could the growth be on this base of 3300 crores?
So that's right. So what I believe we will do, and this is, we have a responsibility as the first listed dealership chain in India. What is happening is that people do not know how to look at dealership chains, and this is a more of a burden that we will have to carry for some time to explain that the business is that of after sales, which is for us growing at least 20% CAGR for the last 9 years. Then there is this car sales and the insurance and finance income. So if the industry, which everybody believes in this calendar year, will grow at low single digit, that's the consensus. I'm talking to a lot of OEs, and the industry by and large, which is more or less 4 million units right now, they are talking about maybe a 5-7% growth in the industry after we grew at 22% last year. So at Landmark, we will grow significantly higher than that because of the after sales revenue, which is compounding at 20%. Our partner OEs, and all of them are bullish on India. They are all investing in India. So that's what we believe.
All right, Sanjay, we're running to market opening, but let's try to get a couple of details out of the way. When is the next renewal with regard to the Mercedes agreement that you'll have? Which year? I
think the agreement will be end of next year's October of 24, if I'm not mistaken.
Okay, October 20. All right. Also, if you could tell us, what kind of tie-up do you have with BYD? Is it an agency
model? So BYD
model?
is a regular agency agreement as we have with, say, a Honda or a Volkswagen and so on.
Okay, so is it a full-fledged dealership model or is it an agency model?
No, it's a full-fledged dealership model. It's not for agency. It is only with Mercedes-Benz. No other OE has been doing it in India.
Got it. Okay. All right. I just want to clear another thing with regard to BYD. Is it exclusive to you or is it non-exclusive?
It is not exclusive to us at all. We are their partners in Delhi and Bombay right now, which we believe are the most meaningful markets.
Okay, got it.
Okay. Can you tell us, this compounded growth rate, your sales has been growing at about 16% if you look at the last 3 years. Is this 15-16% growth rate something that you can maintain? Will you do better than that? And what is the outlook for the full year FY24?
So because we are dealing in premium and luxury cars, what has also happened is that our average selling price of the vehicle that we have been selling has gone up by 22% in this 9 months over the last 9 months. So we not only sell more number of cars, but the ASP of that car is also increasing. So this is what is giving a double effect to what we are doing. And with the new models that are coming in, for example, the new, all this is in public domain, the new Honda SUV which is coming in, the new models of Mercedes-Benz, the new models of BYD, they will all propel us to a significantly higher growth than the industry in this in the financial year 24.
All right, Sanjay, we'll leave it there. Thank you very much for joining us. I mean, if, as they say, as some say, if you're in a K-shaped recovery, you're in the right part of that K, right? I mean, the premium end, which is doing well.
I'd like to believe that, and thanks for what you are saying. Yes.
Thank you very much. Thank you. Although, of course, we hope that everything picks up and not just the top end. Numbers for the third quarter have kind of brought that fact out very, very starkly. You know, the smaller unit value items across companies, I mean, they've struggled, whereas the high ticket value items have done well. So that's a landmark for you.
By the way, just want to make one mention. You know, Mercedes sold its highest ever number of cars in calendar year 2022 in India. About 16,000 cars were delivered in India. And this was a 40% growth compared to the previous
21.
year. Compared to 21, yeah. In 2022 is what I'm talking about.
All these premium cars
have done exceptionally
very
well.
I just sit out of this one.
We all sit out of this, just comment, I just. All right, let's get 9-10 calls out of the way. Sudarshan is with us and so is Mitesh. Sudarshan, what do you have?
Well, TVS Motor is a buying opportunity for a positional trader. Buy with a stop under 1,050.
And Mitesh, what about you?
I'll go with the buy on ITC. Keep a stop at about levels of 376. Look for targets in excess of 400.
Okay, by the way, GMDC is the other one. We were telling you about it earlier. Very strong numbers, good margin performance, and the stock actually is up almost about 5-6% in pre-opening. So that's another one that I need to draw your attention to. 9% higher now on GMDC.
You know, so just a quick word on these numbers. They look very, very good. The problem is coal prices have cooled off. So maybe it will not get replicated, you know, in Q4. And the other problem for these numbers is, you know, the management joined us and earlier they were guiding for 10 million tons. Then they scaled it down to 9 million tons. But at the 9-month mark, in terms of production, they've done around 6 million tons. So I'll be keen to have them on the channel and ask them, are you going to do anything close to around 9 million tons? Numbers very, very good, valuations in their favor, but Q4, it's a bit confusing out there, so management only can guide for that.
Okay, open invitation to the management then for that, but 9% higher. Let's find out more. PI Industries was also a very strong set. Sonal is here with more. Sonal, over to you.
Well, yes, it was a stellar set. Another quarter where the company beat street estimates. If you look at the revenues, they came in at 1613 crore rupees, slightly lower than what the street was working with at 1700 crore rupees. EBITDA was higher at 416 crore rupees. Margins came in at 26% versus 23.7%, and profits also higher than the poll at 352 crore rupees. If we see it on a YY basis, revenues they have grown by 19%. EBITDA is up 40%. Margins are up 400 basis points, and this is at a time when most of the companies are talking about higher raw material prices, and profits are up 58% as well. The export business showed strength, up 23% on a YY basis, which was largely price-led, 14% price growth, 9% volume growth. Domestic growth was lower at 2%, and the company says it is because of adverse weather conditions and higher channel inventory. However, EBITDA margin improved because of favorable product mix and operating leverage as well.
All right, Sonal, thanks very much for that. Vodafone Idea we'll shine the spotlight on again. Rima is here with that. Rima.
Thanks so much for that. Well, it's another difficult quarter for Vodafone Idea. The revenues are just up 0.1% quarter on quarter, so flat revenues. Losses are mounting, almost inching towards the 8,000 crore mark. 7,990 is the loss clocked in by Vodafone Idea in Q3. Margins have improved on a quarter-on-quarter basis, so that is a stable print. The notable fact is that capex is coming down for the company. So capex in Q3 is down to 750 crore rupees versus over 1,200 crore in the prior quarter. So this cash crunch is resulting in the company curtailing its capex spend, which directly then has implication in the kind of service you would have and therefore the subscriber experience. And subscriber losses continue for Vodafone Idea. This quarter, quarter on quarter, the overall subscriber base, which includes 2G, 3G and 4G, is down 5.8 million. quarter on quarter. The 4G subscribers have gone up by 1 million, so that's a positive. But again, if I compare Vodafone Idea's 1 million 4G subscriber adds, it trails Seya Bharti, which clocked in a more than 6 million 4G subscriber adds on a quarter-on-quarter basis. Pricing has gone up by 3.3%. That's the ARPU to 135. Because the cash is a bit difficult. As I said, the company's brought down its capex. The net debt is now at 2.27 lakh crore rupees. The government has now agreed to convert the interest on the AGR dues into equity, but that conversion will show up in the shareholding only in the 31st of March 2023 when the shareholding gets updated. The company says they remain engaged with lenders for further debt raising as well as other parties for equity or equity-linked fundraising, but the debt is high and it's been another difficult quarter, though the performance in terms of numbers has been stable on a sequential basis.
All right. Thanks a lot, Reema, for that. Well, just 30 seconds left for the markets to open. Wanted to mention the market is in a mood to reward good numbers. So Torrent Power, PI Industries, a couple of other Siemens, all looking pretty good. GMDC, all reacting well to their numbers. All these stocks are anywhere up between 5 to about 8% and Torrent Power is really topping the charts this morning. Apart from that, you still have a couple of stocks that are under pressure. So the overall market mood is not that great. It's flat with a bit of a negative bias. Apollo Hospitals has been under pressure for the last few days. So today as well, down about 2.5% in pre-opening. And in general, the mood on consumption is not too great. So ITC and HUL are down about 1%. But that's the first tick on the index. It's lackluster, you'd have to say. The Nifty is down about 40 points. The Sensex is down 160 points. And the Bank Nifty is down almost about 100 odd points. So as the SGX Nifty was suggesting, it's a back foot for the market. And the first tick is a pressure on the index. The mid-cap index is down about 0.2%. What's dragging the markets is technology stocks. Wipro, Infosys, TCS are all down about 0.5% or so. ITC is also topping the charts on the downside. ITC and HUL both are down about 0.5 to 1.5%. Banks are also exerting some pressure today. So Kotak Mahindra Bank, SBI, and a couple of others, ICICI Bank, just a tad bit in the red. On the upside, though, Adani Group stocks are making an attempt to recover again. Adani Enterprises, Adani Ports are in the green. Reliance, there's so much talk about whether Reliance is going to break out of that range. It's up about 0.5%. M&M is up 0.2%. Eicher Motors is up 1.5% post the results yesterday. And Hindalco is up almost about 0.3%. So all in all, you'd have to say it's a pretty subdued start for the market. The Nifty is down about 45 odd points. Would be interesting to see if this dip gets bought. But so much happening in the broader markets with GMDC, Torrent Power, all reacting well to its numbers. Nigel will take that forward. The advance decline ratio, though, is in favor of the advances. So you'd have to say lackluster start, just hovering around that 17,900 mark.
Well, that's right, Sonia. I think it's unexpected lines, right? That we expect to see a bit of a pullback. I think we maybe get a bit of a deeper, gash as well as the day goes on. But remember, 17,830, that's a crucial level. If that holds out, then maybe, in fact, you have some unfinished business on the upside. Talking about a couple of stocks, Oil India as well as Glenmark Pharma, both of them did very, very well in the last few days. Well, both of them have come in for some profit taking. So keep an eye out on that one. Sonia was telling us about Bharat Forge numbers. Well, there were a couple of downgrades that did come about. That stock's down close to around 4%. India Bulls Housing Finance as well is down close to around 2.5%. And Dixon as well has opened up with a cut of around 1%. PI Industries, that's flying away. Beautiful start to that one. That's moving higher as we speak. And Biocon as well, in reaction to its numbers, that's up close to around 1%. The mid-cap index, well, it's more or less flattish. The Nifty is down close to around 40 points, and the Nifty Bank as well is a little bit lower. But let's pull up the IT index. Yesterday, in fact, it did quite well. It was up close to around 1%. You have the NASDAQ as well that did pretty well overnight and recovered from the day's low. For starters, it's down close to around 0.5%. But let's see whether or not it plays a bit of a catch-up like we saw in yesterday's trade as well. Prashant, what else?
Well, it's a slow start, Nigel, isn't it? And, it's not neither here nor there, that kind of a picture. 40 points lower. The currency is the other one, right? I mean, we have a bit of a lower start on the rupee against the dollar, which basically brings 83 back into sharp focus. I mean, the previous low was 83.3, and around there was a fair bit of chatter that, the RBI will defend that level. I mean, we'll see. But it's opened weaker against the USD. Here on the index, not very much. It's just a 40-odd point cut at this stage. More stocks in a bit from now. We've Nilesh Shah who joins in. He's Managing Director at Kotak Mahindra Asset Management Company. Nilesh, great to have you with us here. Appreciate your time. I hate to start with not negative, but the results are for the third quarter, and we're only at the fag end now, almost done. It's not a very encouraging picture. I mean, actually, one can ask the question: where are the upgrades based off this quarterly earnings season for FY24 and beyond? There are more downgrades, and you had alluded to this in the middle of the third quarter when we had spoken that maybe profitability matrices, etc., are deteriorating at the margin. Now with Q3 behind us, what are your thoughts, Nilesh?
So undoubtedly, Prashant, the broad results are in line with market, but that's only because of superlative performance from banking and financial services. Moment we remove the BFSI, there are few exceptions here and there, but by and large, companies have given results which are little below expectation. In fact, yesterday and this is more in a lighter way, it seemed Alan Greenspan used to track what was known as innerwear index. He'll try to figure out based on the volume of innerwear what's happening in the economy. And if you look at the listed innerwear companies' results, they all are showing volume degrowth, not turnover degrowth, volume degrowth. So certainly there is a cause of concern at the below expectation results for many of the companies in September 22, as well as December 22 quarter. In some cases, it is coming because of the margin pressure. In some cases, it is coming because of volume growth not materializing as expected. Obviously, market is looking forward now to the March 23 quarter. Let's hope and pray that the subdued trend of September and December 22 gets reversed in March 23.
Okay. Nilesh, hi, good morning. Great to have you on the show. I wanted your thoughts on one particular pocket, which is the new age tech companies. Now, there is a path to profitability that we're seeing here, especially, for some of these companies, whether it's Paytm, Nykaa, to a certain extent, even Zomato. Do you think that the time has come to nibble into these stocks, raise allocation here, or would you stay away entirely?
So one, these are high risk, high return bets. Number two, here you'll have to be ready for much higher volatility than a normal stock. Number three, choose those stocks which have deep pockets. Your business model, may not be able to survive unless until your sponsors are going to put capital into this. And most importantly, always keep dry powder to average into these stocks. So we are tasting the water. We have our own path to profitability for many of these companies which we cover, not necessarily we own. And every quarter when the results come, we try to upgrade those models to figure out, are the companies reaching to paths to profitability at a faster pace or a lower pace? If they are faster pace, then we try to add something at our prices. If they are at slower pace, then we try to restrain. Essentially, be ready for higher volatility. These are high risk, high return bets. And you have to be creating a portfolio rather than selectively going in for a stock, because you never know which one will succeed.
Nilesh, we get monthly data for flows into mutual funds. And we've spoken about this in the past, right? A whole new wave of new investors came into the market after COVID, during lockdown, etc. And they've stayed. The numbers kind of bear that out. At least the SIPs are going strong. They're very strong. But what is your sense? I mean, is that in your assessment, a secular kind of a trend, or if markets, they're already down on a one-year basis, no returns actually on a one-year basis, more than 1 year now. Will that also come under a bit of threat question? Your sense?
So, Prashant, I'm like a barber whom you are asking whether you need haircut or not. As mutual fund manager, I'm going to say that yes, mutual funds are here to stay.
No, mutual funds are here to stay, but I'm saying
data. And the flows are here to stay. But let me give you some data. As per SEBI's own research, 89% of investors lose money while trading. and only 11% makes money. This 89% which lose money is far more than what 11% makes money. If we do similar kind of research on mutual fund investors, long-term investors, I think the ratio will be almost 100% making money. Now, this is creating word of mouth publicity. A parent will advise their kids who are starting their financial journey, beta beti ek SIP kar lijiye. SIP is now becoming part and parcel of everyone's life. And thanks to the mutual fund distributors, this SIP investor along with existing investment is creating a beautiful pattern. In a market which is expensive, we get SIP minus redemption. I net have to invest 1,000 to 2,000 crore a month. In a market which is cheaper and falling, I get SIP plus subscription. Suddenly I have to invest 25,000 crore a month. This pattern is too good to ignore. Thanks to all the mutual fund distributors which have educated investors, and which is where I believe going forward, the bottom of the market will happen faster than what we can expect. At the same time, top of the market also will happen faster than what we can estimate. The range will become narrower going forward thanks to the maturity of mutual fund distributors and investors.
Okay. By the way, I just want to mention Bharat Forge is really taking a knock. It's a 7% fall that we're seeing on Bharat Forge. We were telling you in pre-opening how there are a lot of brokerages that are now very cautious on the stock because of the subsidiary losses that we've seen in the overseas business, as well as debt has been piling up for the company. So the street definitely doesn't like that. Some downgrades coming through from Nomura this morning as well.
So even the data, right? I mean, the Class 8 truck orders, and I put that question to Mr. Kalyani yesterday. Therefore, January, this is the fourth quarter, not the quarter for which they've reported, they're sharply down. I mean, they're down 25% month on month. Over December, January is down 25%. And you know, of course, Mr. Kalyani said, well, you know, the current order book is already is good for 1 year, so they're okay. But not good at the margin. I mean, it's negative. I mean, markets get excited when this number comes very strong. So it should be so that it's the opposite when it reverses.
But I think there's a common theme here, right? And Nilesh, I wanted to get you in on this. Europe and the global markets are still under quite a bit of pressure. Every company that has an exposure there, whether it's Tata Steel, whether it's Bharat Forge, a whole host of others in the pharmaceutical space, are indicating that the worst is not over in terms of a fall globally. What do you do with such names if you have them in your portfolio?
I think this is time to accumulate such names. We believe, as per IMF forecast, most countries are bottoming out in terms of GDP growth. The probability of recession in US, as per one research report, is down from 70% to now less than 20%. In Europe, also natural gas and other energy source prices are lower than Russia-Ukraine invasion. I believe GDP growth is reviving from the bottom in Europe as well as US. Global growth from the bottom will now be positive in terms of direction. And this will mean that global commodity companies or specialized companies should see better volume, better margin in the days to come compared to the depressed expectations. In terms of pharma, the real challenge is the distribution monopoly in US. There are no more than 3 players which control bulk of the market. Despite providing 45% of medicines consumed by Americans in volume, we don't get more than 10% of the total, value spent by American consumers. Now, this shows the margin or the power of distribution companies. Until such time there is an equilibrium between manufacturer of medicine and distributor of medicine in US, one will have to be a little bit cautious on the pharma companies which are present in US or which are exporting to US.
Okay, all right, Nilesh, always good hearing your thoughts. Thanks so much for joining in. And as you said, for Beta and Beti, it's become a way of life. The SIP, we continue every month, and hopefully, things work out to the positive 15, 18 years down the line. Thanks so much for joining in. Well, let's move on. Let's invite RVNL. Well, they posted a rather weak set of numbers in terms of execution. The revenue this quarter came in completely flat after 7 straight quarters of high double-digit growth. The company's margins as well contracted around 5.5% from around 6.3% odd. Well, Mr. Rajesh Prasad, the Director Operations of RVNL, joins us. Hi, Mr. Prasad. Good morning. Thanks so much for joining in. Well, I recall when we chatted the last time around, you said by the end of this year, you'll do a top line of close to 21,000 crores. And in terms of profitability, you said 1,100 crores. Now, at the 9-month mark, you've done close to 15,000 crores, and your profits are almost at 1,100 crores. Do you want to revise the number for FY23? And what can you guide for FY24? Go ahead.
Okay. So very good morning, Mr. Prashant, Sonia ji and Nigel. It is always very glad and privileged to get connected to your valued and esteemed TV channel. So you talked about the top line, you talked about the bottom line. See, if you compare with respect to the FY21-22, there is an increase of the numbers in terms of the revenue as well as the bottom line, that is the PAT. Just now you said that we have crossed the PAT of 900 plus crores, 920 crores to be precise. And with this, it is possible to achieve even 1200 crores. I had said the bottom line will be 1100 plus. So 1200 crores is very much possible, and it is likely to be achieved without fail.
Okay.
Coming to the top line, I had been saying that it is going to be 20,000, 21,000 plus. And there is always basically a memorandum of understanding between the Department of Public Enterprises, Ministry of Railways and RVNL. It is done for almost all the PSUs. And there we have been given a target of 20,000 crores. And so we are certain that we will cross these 20,000 marks, maybe 21,000 marks. And with respect to the previous financial year, after the Q3, we had a number of around this year it is more than 14,560 crores, and last financial year it was around less than 13,000 crores. So again we are up. And the third thing which we have been highlighting is the physical performance. These are the financial numbers, and if you see the commissioning part, we have commissioned around 810 kilometers during this financial year, which is contributing around 30% of the entire commissioning by the Indian Railways, including RVNL. And it is, with respect to the previous financial year, it is around maybe 25% higher, 600 kilometers vis-a-vis this time 810 kilometers. So we are up in terms of the top line, in terms of the bottom line, in terms of the physical delivery. And coming back to the FY24, again, I am telling you that the top line is going to be 21,000 plus crores. The bottom line will be maybe 1,200 crores plus. And we would like to have the order book of around 75,000 crores to 1 lakh crores.
No, Mr. Prasad, for FY23, we got that, more than 21,000 crores with profitability of around 1,200 crores. What about 24? There'll be some growth, right, on the top line?
This is what I said. The FY24, the top line, 21,000 to 22,000 crores plus. The bottom line, more than 1,200 crores plus. At the same time, would like to have the order book of around 75,000 crore to 1 lakh crores plus.
So there's no growth from FY24 to FY23?
There has to be growth. There has to be growth. See, you'll have to understand the business model. We have got the projects on the nomination basis. We are having the SPVs. We are executing the SPV projects, which are more or less getting over. Then we have got the works which we take from the bidding. And then we have got the dividends or the basically profit from the SPVs. So these 4 or 5 models, whatever models are there, and since we are in the market, so there is a likelihood of change of the margins. The models have changed, and this is a very new arena. You see, this is only 1 year and 6 months back. We decided to bid in the market, and we are in the market for the last 17, 18 months. And we have almost changed the entire model, and the company not only survived, the market has also appreciated. See, I will cite one simple example that the RVNL share price increased by more than 100%, whereas the similar BSE 500, this was stagnant to the mark of around 24,000, and the BSE infra is around 288, 290, or less than 300. So, sir, with respect to this, yeah.
So, Mr. Prasad, just to understand, right, at the end of 2022, your FY22, you're almost at about 20,000 crores. You're saying that you will do about 21,000 crores by the end of FY24. Is that correct?
Yeah, yeah.
Okay.
And then I also said that the target which has been given by the MOU which has been signed with the different ministries, it is 20,000 crores. The commissioning is 1,000 kilometers in terms of the physical delivery. So everything we are going as per the MOU, depending upon the scope, depending upon so many factors available.
Okay. Can you give us some, update on the international orders, both with respect to Kyrgyzstan as well as the Mauritius order that was declared in November of last year? What's the status there?
We are a listed company. These are the sensitive informations. We are governed by LODR. So whatever the informations are required to be shared, we normally shared through the stock exchanges, through our websites, and we have already deliberated upon that. And the same things are same is available in the public domain. Yes, we are moving forward, and the company has become from the local rail infra to global all infra. So we have already started executing some of the projects.
So when will you be able to, these international orders, you said you started executing them, when will they see the light of day in terms of revenue potential for the company?
See, earlier we used to get a lot of works on the nomination basis. Now it is totally stopped, and now we are in the market. We have to depend upon all kinds of infrastructures and not limited to India. And we have participated in bid maybe to the extent of 70,000 crores. Our strike rate is around 24-25%. So in time to come, I can tell you the future of this particular company is very, very bright.
Mr. Prasad, it's great that you're giving us exact numbers for FY24, but that also makes me wonder that there is a element of finality to these numbers. At the end of the day, you're in the marketplace, and there are many variables out there, right? Could you tell us what percentage of your business is through nomination, which then you will make?
I'll tell you one small thing that at the end of the FY 22-23, the order book will land around 55 to 60,000 crores. Out of that, around 20% of the total order book will be from the business development, that is from the market bidding.
Okay, out of 55,000, 20,000 will be through bidding, and the rest
20%.
is...
I said 20%.
Sorry, 20%. 20%. Okay, okay.
Of that will be through the bidding. Yeah. See, this is a government organization. We have got a government share of 2%, and then we have changed the entire model. And then, we have been able to deliver, and all the numbers speak very high about the company.
All right.
So, Mr. Prasad, just to get back to that, so 20% will be via bidding, so the remaining 80% will be on the nomination basis, right?
Nomination basis, and some of the special purpose vehicles which are still under execution stage.
Got it. Okay. All right. This order with Kyrgyzstan, it's what, 30,000 crores odd. When can the LOA be signed with regard to these orders?
Again, I am telling you, any overseas project is very, very sensitive.
But sir, sometime in the first half of FY24?
Yes.
First half of FY24?
Yeah, likely.
First half of FY24. Okay, we got that out of the way. And also, in the past, Mr. Prasad, you all have been guiding, I think, for 15-20% revenue growth for the next few years, given the kind of order book that you have. But now it seems that you'll be growing either 10% or sub than that, maybe single-digit growth, revenue growth. That's the execution. This year, you're going to end close to 20,000. Next year, you're talking about 22,000 crores. So that's not even 10%.
Yeah, I have understood. Yeah, I have understood the question. Let me explain and tell you about the fact. Our now focus will be the bottom line. And the investors' interest is also on the bottom line. So our interest will be that the profit after tax, the bottom line, should grow higher than what has been we have been achieving, and the top line may be having an increase of 10%, but we would like to have the bottom line increase substantially, and that will be the interest factor for the investors.
Okay, all right. And so this year you'll end with a bottom line of closer. Earlier you were talking about 1,100 crores. This year will be closer to around 1,200 crores.
1,200 crores without fail.
And next year?
The commissioning part, the physical part, commissioning more than 1,000 kilometers. The top line, 20,000 crores plus, and maybe 21,000 crores. Next financial year, yes, the top line could be around 23,000. The bottom line could be 1,200 to 1,300 crores plus. And the order book, the highlight of the order book will be more than 75,000 to 1 lakh crores.
All right, thank you, sir, for joining in. Sure.
Give me one more minute. You have been digging so many. You have been digging so many questions. So today is the anniversary of Mirza Ghalib. So I have got 2 lines to say here. तुम अपने सिक्के की बातें खोद खोद के पूछो, हजर करो मेरे दिल से कि उसमें आग दिखी है. The company is burning and we are moving forward. We are raring to go and we are making sure that in time to come the company will grow further and further.
All right, I should say Wawa, right?
No, you should say Adab, right? No, I don't know. What is it? But it's great. Wawa, correct. Okay. Thanks a lot, sir, for joining in. A
Thank you very much.
Yeah, pleasure speaking to you, and thanks for uplifting our mood as well with a little bit of that poetry. We'll slip into a quick break. On the other side, we have the management of Apollo Hospitals. Very important discussion because the stock has been under pressure. Margins have been weak as well. Sunita Reddy will be joining in. We'll also connect with Pradeep Kheruka, the chairman at Borosil Renewables, to discuss their Q3 numbers.